Go ahead, Mina.
Oh, perfect. Well, good afternoon, evening, everyone. This is a meeting of the International Model Stock Investment Club. We are a Better Investment Model Club open to the public. Our meetings are held on the third Monday of each month at this time, the exception being December when we meet on the second Monday of the month. All our meetings and stock studies are held online, allowing us to have members from around the world. Our current members are from United States, Canada, and China. Guests, as observers, you will be muted during the meeting and will have an opportunity for questions and comments once the meeting ends. Any companies mentioned today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. This meeting may mention products or services not endorsed by Better Investing or the club. The views expressed are those of members and do not necessarily represent those of Better Investing. This meeting is also being recorded and will be posted on our YouTube channel for future use and reference. And at this time, we're going to move to the Treasurer's Report and our portfolio review. So I will ask Reddy or Tom to take over at this point.
Ready? Are you ready? Or Tom's on. Tom, we'll give it to you first, okay? Are you ready?
Yeah, I'm ready. Yep.
Okay.
So just talking about portfolio review.
Yeah.
Okay, can you see my screen?
Yes.
Okay, so the portfolio review, I've sent this out a couple of times to you people. So the only thing I want to mention on here is the good performance we've had with improving our portfolio. So when Mike Torben talked to us initially, we used 10%, but we really should be using 16.1, which was our Friday most recent one, because our portfolio has improved so much. So I'll just go to that now. So the highlights of this month is that we have one suggested buy, Algonquin, and one suggested sell Schwab. So this is part of the agenda later, and the stock mentors will talk about it. As I said, the 16.1% is the good news. This is taken from the summary report in the PERT summary. So in the future, we'll use that to adjust. We now only, at this time, we only had like Charles Schwab was one of the stocks that didn't meet, and I can't think of the name of the other stock right now that missed it. But again, just to reiterate, we'll start moving this to 16.1%. The other thing that's come up is that editing your BI data. So for you have we're trying to establish a trend line here. If for some reason you want to edit the data, this is right now, you have to let me know that you've edited the data. Nothing wrong with editing the data. Go ahead. So what will happen if you click the data button here, you will get annual or quarterly data that you want to edit. In this case, I was just showing a quarterly data edit. And to say you want to change the first quarter earnings, it's 1 cent. You think it's more, it should be 74 cents. You type that in, and then you click here. You would normally do this yourself, and then BI, whenever they update, put the next quarter in, this wouldn't get overwritten. Or if you want to put a new quarter in here, you've got your information, but BI hasn't updated with Morningstar data, it hasn't arrived yet. You could write it in here and then click this here or lock it, and then it would be there and it wouldn't get overwritten. So why I'm telling you this is, for instance, Reddy, he uses data for his innovative properties. He uses adjusted funds from operations rather than earnings per share. So we have to go in and lock all this, and I have to lock it whenever I upload it into the SSG, the downloading and uploading to PERT IT with your ITK files doesn't stick. So this is just a caution. Just send me an email. Just give me a heads up that I should lock your data, and I can then any edits you've done will be maintained. So that's my report. Freddie's there. You could move the screen to him. Hello?
We can hear you.
Okay.
We're all muted.
Thank you. Yes.
So are you done? Are you done? Ready for ready? Ready? Are you on? Ready? You need to unmute.
Oh,
Okay.
okay. I'm
And
on now.
And accept the presenter. You're gonna see. Show
How
your
do
screen.
where is the acceptance button? Oh, man.
Oh,
Okay, can you see my screen?
no, not yet.
How do I accept it? Now it's all slides.
Probably hidden in the back. Are you in a full presenting mode for your PowerPoint? Go ahead and hit
Yeah.
the exit key first, maybe hidden in the back.
Which box?
So
Hit
are
escape.
you escape? Yeah, go ahead.
Hit escape and then
Okay, escape. It's not.
No. I'm asking you for your PowerPoint, are you showing the full presentation mode?
Yeah, it's in the presentation mode now.
Okay. So you want to hit the escape. You
To
know
get
what?
out of
For the time being,
I did.
You did? Okay.
Yeah, but I'm.
How about you look to my screen and just kind of walk through?
Yeah.
You can
Okay,
see my
fine.
screen. Okay.
Okay, that's fine.
Okay. All right. I need to make myself presenter or some. Let's see. Okay, just a second. Okay, show my screen and present. Okay.
Okay, next slide, please. Okay, this is the overall summary of the transactions for this month after the last meeting. There are 2 members who have withdrawn. For this time, I assume that they are withdrawn right after the meeting and paid them off the next day and paid according to the units. Both amounts are small. We were able to meet from the cash and then deposited $1,000 for the total club, 14 members after these 2 left. Then we bought iRobot worth $2,000 price of that day, day after the meeting. And now we have left with cash balance $218. One thing I do not know, but I discussed briefly with Joanne, whoever has permission to update the membership lists because after withdrawal, please update them. Next slide. This is the overall summary. What happened to our cash positions? The last month on the meeting day, we have $2,200, deposited $1,000, members withdrawal 2 members, and then this is the iRobot purchase. Now cash balance. That explains the next slide, please. This is the heat map, and just showing that our largest stocks are Facebook, Disney, IAPR, Schwab, and things like that. And next slide. Club portfolio, these are all directly available, but important few slides. The important thing I want to show is the account is now small. So if any cash we want to buy or any member withdrawn, we have to think about possible sale or increase in our contribution. Next slide, please. Company size diversification. Again, I think for some reason the mega and large, which together is large, we have a large amount of equity in that one, and mid and small are okay. Next slide. Portfolio sector diversification. Again, we have a large amount in communication services. I think because of the duplicate similar stocks of the same kind, we can reduce that possibility. Next one is diversification. We have, I think, a good amount of diversification here. Next slide, please. This is our performance benchmark index. This year we are lagging the other indices. We marked two indices here, Vanguard 500 and Vanguard Total Market indices. But for a lifetime, 1 year and 3 years, we are doing good, including 5 and okay. Next club, club membership positions are shown here. I just heard pre-meeting discussion that another member is getting withdrawn. We have to think about where to get the money and how to probably this month's contribution I did not add yet. That's another issue that we have to discuss. When do we add each month's contribution, before the meeting or after the meeting? Okay. Next slide, please. This is our portfolio. You can see that BioMarin is still, I know we bought it with a special intention. iRobot, we just bought it. QLYS and Vertex is still negative, but again, we bought it only 2 months ago. All other stocks are doing good. Next slide, please. This is a membership stock watch update, and you can see that more members are directly updating. For example, yesterday I went and looked at IIPR, and on my own BI site, I updated it and immediately entered into our club site. So if you all link to the club site, you can automatically, whatever you do on your BI site, it gets carried. So I encourage that. I think Joanne has instructions and BI has instructions too. Next slide, please. I think that's the last slide. Any questions?
This is the last slide.
Any questions? I indicated two stocks are not assigned. I think the iRobot is.
It used to be when I was watching this webinar, I could see who was talking, but it doesn't show up today. I can't see this on the far right here. It doesn't tell me who's talking, but
I know why.
and I'm real surprised. I didn't know why. Go ahead.
Bernard,
Help me,
because right
please.
now we tell you to look at your screen right now is a full screen, right? Why don't you go ahead and hit the
Yes.
escape key so then you can see it?
All right. Okay, now I see.
Yeah.
Oh, well, but now somebody talking. Now see if they can talk. I can see. So far, I don't see anybody. If anybody talks, I can. It used to tell me who was talking.
Yeah.
But I don't see that anymore.
Okay. So what's on the agenda? Because I'm also in the full screen.
Bernard's next.
Okay,
Bernard.
so I'm going to make a Bernard as presenter. Bernard, so we can see your screen.
A quick question on the SSG link established.
Okay, go ahead.
Can you remind me again, do we have to do that every time we update our SSG, or just once and it automatically does it?
Ready?
Yes.
You answer that? Can you answer that question?
Yeah, what is the question again?
The SSG plus link established, is that something that we have to do again every quarter, or once you establish it, it's done?
Well, no, once you link it, it automatically updates. Whatever you do on your BI site SSG, it automatically updates immediately on the club website.
Okay.
My iClub website.
Okay, Bernard, did you accept the?
Yeah.
Okay. I'm going to start my present.
Go ahead and accept yourself as a presenter first, Bernard. But you have to escape the full screen because you cannot see.
Okay, I'm going to say show my screen.
Yes, beautiful. We
And
can
now
see it.
can I start?
Yes. Go ahead.
Okay. So today I have the honor of reporting to this great club, and I'm reporting about a great investor, David Dreamin, who is the author of Contrarian Investment Strategy, and that's the book I used to make this report. Now, David was born in Winnipeg, Canada in 1936. He was educated at the University of Manitoba. And although he was born and educated in Canada, he still became a great investor. He was a senior advisor at Value Line Investment Services. He was chairman of the Dreamin Value Management organization, and he wrote 5 books, and he was a columnist at Forbes magazine.
How many Canadians do we
Now,
have listening to this?
I'm hoping that Haney caught that. I was hoping to make him laugh.
I don't think he's on today.
But
He's babysitting. He just got
oh,
newborn grandson.
but anyhow,
Next month.
oh, okay, yeah, it's big with the family, which is very important. Okay, so the first half of the book is very depressing because many investment approaches fail. Uh, First of all, human minds are not up to simultaneous interacting variables. We can do sequential thinking, one thing after another, a little bit. But when you have 5 or 6 simultaneously interacting variables, which we do when we have a look at a stock, competitors, the market, the futures, new products, our minds aren't really up to all that. And David shows, and you've got research here that you can go read if you want, that technical analysis has no scientific and statistical value. If you really analyze technical analysis in the long term, it's not a predictor. It's not a valid scientific predictor of the future. And another thing, humans are very subject to groupthink. So like if you have a bunch of analysts and you know your boss, he likes Boeing, well, then you probably like Boeing too, so you could get promoted. So there's a lot of groupthink in the whole world and also in the analyst community. And evaluating future earnings to estimate future value does not work well because no one knows the future. That's the problem. If you're trying to look, this company's going to make 3 years from now, has how much, and so it's going to be worth this much. Well, you don't know. You don't know the future. And only about 9% of managers beat the averages. 9%. Most of them are below the averages. So that's why mutual funds, many of them, and many EFTs, they have gone to indexing because experts, they can't beat the market. So they go to indexing, admitting that they don't know. Okay, now I'm going to the next slide. So now to kind of back up his research, David Dreamin, he looks at stock performance through the years, and he's got many tables. Here's the table, 1937 to 1962, a spreadsheet, the average price appreciation and percentages. I picked this table. He's got others in the 60s and 70s, but I picked this one because it's continuous. A lot of times in the 3rd or 4th year, he'll make modifications and stuff, but this one goes all the way through. So if let's work together on this. If you pick from the highest PE stocks, you pick the average one, and that in 1 year you'll make 3%. Whoops, I went back. Damn it. Okay, you'll make 3%. In 2 years, you'll make 11%. And at the end of 7 years, oh, I got this thing that's over here. I can't, no, I don't want to leave the webinar. I can't show you the table because my, oh, well, anyhow, in 6 years, you'd have 65%. I can't show the edge of the table because the webinar software blocks me. But so if you pick a high PE stock, at the end of 6 years, you'd have 65%. But if you pick the average low PE stock, first year you'd make 16%. And at the end of 6 years, you'd have 125%. So here, this is a great slam at the experts, because the experts are all saying, oh, this is a good stock, great company, invest in this one. And it's very popular, and it's got a high PE. But in the long run, it does not provide performance. So, and this table demonstrates that, how the low PE stocks, contrary to what the experts might say, outperform the high PE stocks. And Dreamin, one time, an analyst was kidding him, says, you got your dogs ready for the next year? And he says, yeah, my dogs, but they're going to beat your dogs. So this is pretty good evidence that low PE stocks outperform high PE stocks. And so this is all, so the first half of the book, like I said, very, including this, is kind of, how would I say it, pessimistic. But now the last, at the end of the book, he starts showing you how you can outperform the market. You've just seen the heart of David Dreamin's work. Experts usually wrong. Below are additional steps. He not only looks at low PE stocks, but David Dreamin takes 5 or 6 steps to invest when he invests. He selects from large or medium-sized companies like S&P 500. These are the ones he likes. They're more stable. He selects a low PE stock. He selects ones that has growing earnings, including the latest quarter. Now, this is something kind of parallel to better investing, that you want growing earnings. And he selects a stock that is not a lot of debt, a good balance sheet. And you select the company that also pays a dividend. You do all these things, you'll do well. Invest in that company. And for a while, David was in charge of managing a mutual fund. And there was 200 funds in the group, and his performed number 1. So anyhow, that's and his book was really well. I noticed the dust cover. His book was well received. The desk cover, it showed that Warren Buffett liked it and said it's a good read, but it's also good ideas. And so that's a little bit from David Dreamin. He's one of the great investors, sort of like Warren Buffett or John Templeton, and his contrary approach. And now if someone has any questions or anything, I'll be glad to try to help them. Okay, so go ahead.
Does any of this contradict with what we go against what we do as a club? I guess we don't always pick a stock that pays a dividend.
I don't think so. Yeah, well, no, we don't do all of the things, and you don't have to. I mean, this is what David says, and we don't have to do exactly what he says. I'm just trying to report what he recommends. I like better investing approach. I think it's pretty solid. I mean, going on earnings and pre-tax profit and sales. I mean, we're doing the best we can. And I think it's parallel to David's approach, especially we pick companies financially sound, growing earnings. It might be a little bit different, but because we don't always pick for a dividend. But I think we're more parallel and different than David's approach.
We do have a hard time
Go ahead.
finding small companies.
I have one comment. I think with this presentation, I feel that we don't specifically pay any attention to low PE stock consideration.
Yeah. We don't put the emphasis there like David does. You're right. But
what's considered
now,
low?
I think, pardon, I couldn't hear. I'm sorry.
I said, I guess one of the question is what's considered low as compared to average PE. Sometimes we look at that, we compare where current PE is in relation to average PE, I guess.
Industry PE, or is it company PE average?
The company's
average. I was working with Tom Loftus was going to help me a little bit. Is Tom here? I thought, well, okay, because that was the next question. How do you know if you got a low PE stock? And I guess I'll carry that on next. One way you can do it is just use the PEG ratio. The price, the PE over growth. And the PEG ratio, like Peter Lynch would say, your PEG ratio should be 1, ideally. But the industry standard, typically people say any PEG ratio below 2 is okay. But if the PEG ratio is higher than 2, you're getting into the high PE range and you shouldn't do it. So you can use the PEG ratio to see if you're getting a low PE stock. There are other ways. I thought maybe Tom was going to help me with this other, but that's all right. We can just use, you can use the PEG ratio, and that will get you there. I mean, you'll know if it's a high PE or not.
And when you say growth, what number are we talking about?
Any more questions or comments?
What's the denominator?
The growth.
I have one question.
The growth.
Just a second. Let me. Megumi had a question. Bernard, can you address first, please? Megumi, can you repeat your question?
The growth rate is the growth in earnings, and that goes under the PE to give you your PEG ratio.
Thank you.
That's the way I understand it. So now, any more questions or comments about this? Otherwise, I think I'm supposed to go maybe and to show how to go to Yahoo Finance and find inside ownership. If you want me to.
Yeah, Bernard and Tom, my basic question is still the same. When we want to consider low PEs of the company stock, shall we pay the low PE of that company in its own history, or do we compare the low PE of that company among all the industry peers? What is the real criteria should be? When Dreamin wrote this book, what did he intend to? Low PE of the company by itself, past several quarters, or comparable to other industry peers?
Yeah. Well, I think Bernie talked about that. Yeah, but Bernie talked about that. You know, you look at the PEG.
So of the company.
Yeah, of the company, right. I mean, you can look at some industries do have higher.
Yeah, of the company.
But again, you compare the PEGs.
Yeah, the PEG ratio of the company you're thinking to invest in. I would think that would bring it pretty close to this. Now, should I go into Yahoo Finance and we'll briefly walk?
Yes. Go through that, Bernard.
Okay. So,
so
it's real simple.
Minutes.
You go to Yahoo. Okay. Well, for this insider stuff, it's real simple. You go to Yahoo Finance and you type in the where the hell is my? I got to find it. I got to go in. I can't.
Just put a
I can't
symbol
get
in.
into the. But I can't.
What are you
Oh,
trying to
here it
do,
is. Quote.
Karen?
Look. Okay. Okay. So now, which stock you guys want me to look at the insider stuff?
Doesn't
Well,
matter. We can look at
Schwab.
Comcast.
Schwab. Oh,
Oh,
Comcast.
Schwab or Schwab. Doesn't matter.
Schwab.
Just pick-
Okay, I'm gonna do SCHW, right?
Yep.
I
Yeah.
don't.
Yes.
Or it's B.
No, W.
It's right
W.
there.
SCH.
It's popping. The third one.
It's right
Okay,
there.
Charles Schwab. Okay,
Yeah.
then you click. Okay, you click on that, and then here it comes, Charles Schwab, and then it's real simple. What you do, you go to. I can't navigate very well because of this software here. Let me see if I can move it out of the way. Oh,
Do you
wait, here it
see?
is.
Do you see
There, I
the
got it.
orange?
I got it out of the way.
Okay.
I got it now. So, and we had Schwab, right? We still have
Yeah.
Schwab.
Yep.
Okay, and you go to your profile options holders. You click on holders. Boom. You click on holders, and that'll get you there. And then here you go down to holders, and you can see major holders. 7.2% of the shares are held by insiders. That's quite a bit for a big company like Schwab. So there you can see their insider ownership is substantial, 7% for a big company. That's pretty good. Now we go then click to insider roster just to see who some of the insiders are. And boom, here it is. And you can see, oh, they're selling awards, stock. So you can get it, and you can see Harf Williams, Herringer, Frank, Levin. You can see some who the insiders are. But even more important, I think, I like to go to insider transactions. And this will show you for the last 6 months who has been buying and selling the stock. And you can see here that purchases 1,627,000, but sales are 4,803,000. So the more shares are being sold than purchased at this time. And you can see the amounts right there.
3-1.
And that's how it's real simple to see and to get to it in Yahoo Finance. And I think that ends my presentation. Unless someone has questions or comments, I'd be glad to listen.
I have one question, Bernard.
Yes.
Most of these company insider sales are from the company officers who get these shares by bonus and other awards. So they have to sell. So I think we have to look at that criteria when we look at these numbers. All the insiders, they get award shares and they have to sell some of them, but how much they kept is also a good indication. Are they keeping more of their shares? Are they selling more of their shares? They get awards.
Yeah.
Okay.
Right. That's a good point. You can't really, but here's another thing too. The most important thing, what I think, is when you see insider buying. Sure, they have to sell because they need the money and maybe they want to send their daughter to college or they need a new car, or that's part of their pay. They have to convert
Yes.
it into money. But when you see insider buying, that's a real good one because they're only buying because they think they're going to make money.
Yes.
So the
Yes.
buying is more important than the selling.
Can we
Yeah.
check Algonquin?
That's a very good point. If the insiders are buying, that means there is some good news about that company. But if insiders are selling, because they are selling large number of shares, they got awards. Some of them they have to sell.
So
So
can
them
we check
buying is a
Yeah.
good.
AQN? AQN, since we're suggesting buy, see what's happening there?
Okay, we can go up, sure. I'm gonna put this away. We just let me put, what stock you want me to put in now?
AQN.
AQN.
AQN. Okay,
Yeah.
very good. AQN. There it goes. And it's okay. And now here it comes, and we're gonna go to holders. Just make sure, and then we go down to, here's holders. Oh, come on. Major holders. And we see here 0.16%. There's not much insider holding at this company. And I'll go to the roster, insider roster. And boy, it's a long list. And you can see acquisition, purchasing plan, exercise of rights. And I'm going to go last thing. You can study that if you want. I'm going to go to just the last 6 months insider transactions. And we'll see. Okay, and here we see the last 6 months, purchases 0, sales not available, net shares. So there's no insider trading in the last 6 months in this stock. And there wasn't much insider ownership to begin with.
This is a
Okay,
Canadian
any others or
company.
else?
This is a Canadian company.
Yeah,
Do you think for their officers, executives, do you think they may be traded in the Canadian exchange?
I don't know. That's a good question. I don't know. Maybe the insider transactions, but it's listed here. I think these figures would be something reliable. That the major whole, according, if they don't have information, they wouldn't tell you. But they say.
Well, Bernard, also there's the Algonquin trades on the TSX, the Canadian Stock Exchange. So I wonder if maybe executives are paid in the Canadian stock just for currency and tax reasons. Maybe there's something there. Should we check TSX?
There might. Yes, I don't know.
I think
That's something maybe. Go ahead.
I think they report U.S. in U.S. dollars because they have U.S. holdings and they want to attract American buyers, although they are a Canadian company.
Right, but they're listed on both exchanges.
Right,
So,
right.
Yeah. So for Canadian purposes, it's generally better to trade in Canadian stocks just for the tax implications, I think. So if you're doing your
For
compensation.
Canadian, yeah, for
Yeah,
Canadian.
right. So for the board of executives, which is I think Canadian then.
Yeah.
Well,
Maybe you could send an email to their investment department if ask questions about that, but because I don't know any more than what I showed you. But so that's I think that's, unless anybody has comments or questions, I think I done doed it.
Thank you, Bernard. It's perfect. It's 6:10 and we're ready for the stock study with Mina, Jay, and Narinda.
Perfect. Just give me
I make
one-
Okay,
Mina as
and I want to
presenter.
thank you guys. It's been a real honor for me to present to this club, and thank you very much.
Thank you, Bernard.
Thank you, Bernard. That was a great presentation.
Yeah.
So
Thanks,
just
Bernard.
Oh, thank you. Thank you. Okay,
you should be seeing my screen, just a
I'm gonna.
quick slide about our presentation. So today, Jay and Narinda and I have, we're doing the stock study. And instead of presenting a new company and a competitor, we've decided to undertake a bit of a portfolio review, looking at 3 companies that we already own as part of our portfolio and seeing whether there are any buy or sell actions there. So again, just the disclaimer about their presentation, the information is only for education purposes. These are not intended as recommendations for buy or sells. These represent the views of myself, Jay, and Narinda, and not necessarily those of Better Investing or the club. We encourage you to do your own research and analysis before making any purchases, and we expect, I believe, some of this information is proprietary. We try to source it generally where we can, but otherwise the information is just whatever is publicly available. I think most of the group uses Value Line and Morningstar, Yahoo predominantly, I think. Moving on. So, oh, I think I overstepped. There we go. So we're going to look at three things. First, why did we choose these specific companies? The companies we picked were QLYS, First American Financial, and Comcast. And then each of us will present a company. I believe I'll present QLYS, Jay will present First American, and Narinda will present Comcast to us. So why do we choose these companies specifically? First, we looked at the PERT review and the portfolio review prepared by Tom and Reddy, and we wanted to see if any of the buy-sell recommendations that result from the technical analysis of the updated SSGs and the financials, do they reflect better investment principles in the sense of these are value companies, these are good buys or good sell recommendations provided by this portfolio, just to see it in action. Specifically, I believe the portfolio review recommended a sell of Comcast and a purchase of First American. So we picked one from each of the recommendations of the buy and sell columns, appreciating that only Algonquin met all criteria for a buy. And I don't recall if, I believe Comcast met all the recommendations for a sell. So a little bit of a difference, but we were trying to pick from those areas. And the reason why we included QLYS is that it was identified as a growth company that seems promising. It falls within it's a small size company, so it does well in terms of the diversification of our portfolio, and so would be an interesting company to look at. And finally, the reason is I understand, as a club, our practice is not to make any buy or sell motions without reviewing an updated SSG and the updated numbers for a corporate company. So rather than constantly looking to expand the portfolio horizontally and buying additional companies, we wanted to give the club an opportunity to look inwards and see some of our current holdings, whether there are any good buy or sell opportunities there, and maybe clean up our internal portfolio before expanding. And so I'll just jump right into it. We started looking at QLYS. QLYS is the provider of cloud-based security. It's referred to often in online searches as the vulnerability management market. So basically, they provide security and logistical infrastructure for cloud networking for businesses across the United States. They also do provide a full array of IT services and website architecture and other online system architecture. And the main way that they make revenue is through a subscription service. So it's a monthly fee for these programs, and then licenses for any proprietary software that's used in that in your specific business's subscription package. So it's generally a subscription service with extras. So I'll just show you an SSG I had mocked up quickly. Initially, when I prepared this SSG, the company was a hold where we had a target purchase price, but since in the last few weeks the price has dropped pretty significantly, about $7 to $8, $9 per share. So now it falls into the buy category for me, but we'll get there. So as you can see from the graph, it does show the general trend of the upwards parallel motion that we're looking for, and the sales figures are healthy. They continue to grow, appreciating that the historical number is 19.5%, but when we eliminate the first few years, it levels off more at about 15% annual growth. So based on estimate projections and kind of the online searches, I've put a conservative 11% for the sales growth in the next 5 years. It ranges between 9 and 13% I found online, and then with the earnings per share, I put the more modest 8%. You'll see the growth is 51. I just don't think that's a sustainable number, especially given some of the drastic increases you'll see from 2013, 2014. There's a major spike. So I think the numbers there are a little bit skewed, but the nice thing we see is that the revenues, the earnings continue to outpace the growth in sales. So they're becoming more efficient in the delivery of their systems, and it speaks to, I believe, the quality of maybe management and their efficiencies. Tom made a great point during the treasury report, and he mentioned to me earlier about the ability to edit the quarterly report data. I wasn't aware that we could do that, but the reason why Tom raised it with me is, well, pardon me, you'll see that in the first quarter of 2021, there was a dramatic decrease in sales, and their earnings dramatically fell. And the reason for that was the necessity to pay out the leading long-time CEO, the founder, co-founder of the organization as well. So Tom made a good point. There was a massive payout for him, and that's what skews the numbers there. I wasn't able to, I made a mistake when trying to update the quarterly data, and I wasn't able to figure out where my mistake was just in time for the meeting. So this is unedited data. This is just the quarterly data. But it should even look a little bit better given the fact that the last quarter's results don't reflect necessarily the actual performance of the company during the last quarter. So going to the valuation, I picked an estimated high PE of 60. You'll see that the average high PE is 65, but I eliminated 2016, which seemed an outlier at 79.3. And so the average high PE is actually closer to 60, 62. So I picked a little bit on the higher end. I think it's going to remain consistent there, given that the last few years the company's PE seems to fall within the same range rather consistently. So I use that as the metric. Doing that gave me a forecasted high price of 166. In order, at the time, the price of QLYS was going at about $106 a share. So I selected just over 25% diminution in value for my low price at $80. And that gives us the upside down ratio now 3.6 to 1. When I first did it, again, with the price of the stock being a little bit higher, the ratio was lower. And so that's why it fell into that borderline buy or hold category. Given these numbers and the dip, I think it's an opportunity to purchase it at a discount. And so my recommendation will shift ultimately to a full out buy. I just want to go through some more of the pros and cons with you, and then I will pass it off to my esteemed colleagues. But so it looks like so the QLYS is projecting, or pardon me, is reporting its next quarter on August 9th, pardon me. And it's projected to report $99 million in revenue, which would be an 11.5% increase relative to the same quarter in 2020. So again, healthy growth. Just taking a step back as well, the industry itself is supposed to, or is expected to grow fairly substantially for the next 5 years. I found that projections of a compound annual growth rate of about 9%, 10%, being the average annual return for that industry. So that does seem rather significant to me. It is a growing space, and we do have a small company which is considered a leader in the space. So I hope there is room to grow in that sense as well. The PE ratio is relatively consistent, so to me that reflects the fact that QLYS is still fairly valued where it is, and we still achieve value by buying the company. And the last 2 points that are in its favor is that it's a small company. We saw with Reddy's report earlier that we do have a predominance of mega companies in our portfolio, so there is some benefit in having an additional position in our small companies just to increase the diversification of the portfolio. And then finally, we own about 2.6% of our portfolio is represented by QLYS. And we discussed in meetings the ideal number is a minimum of 3% per company. So if we do see it as a quality company worth owning at 2.6%, given where the numbers are, I do think it is worth increasing that number to at least the 3% mark. And so for that, now some of the negatives for the company are that the longtime CEO and founder of the company did step down in March, and I believe passed away in April of this year. The new CEO is a longtime executive of QLYS, but Of course, there is then some uncertainty in terms of how this company will continue to perform. Will there be any slowdown with the change in management? Is there going to be a shift in direction? So far, everything sounds great. I mean, the enthusiasm is still there. The message is, you know, continue the trajectory, continue the success. So it doesn't. I don't anticipate much to change, but that is a risk factor. And then the final con that I could really note was that we're not projected to achieve the 15% annual return with this company at this rate. Now, again, I've been relatively conservative in my SSG model, but we don't hit the 15%. Now, you know, I don't think it's necessarily a bad thing if one company is growing at 12, but then, you know, if we are looking at the overall portfolio value, we should give some consideration to that. But in conclusion, then, I would recommend to buy, given that the price is less than $100 per share at the moment. I believe today we closed at 98 and change, I believe maybe 60 cents. So in that range of the $95 to $100, I think it is a buy based on the revenue and growth. So I guess at this point, I will hand off the presentation.
Can we check
Yes?
the PEG ratio? Just because we just talked about it. I'm just curious.
Absolutely. Now pardon me. Oops, sorry. Let's get that up. How do I?
Go up to the top. I think I saw, and then ratios. Yep. Is
PEG ratio now is 6.0.
based on projected PE.
Oh, yeah.
Okay. I was just curious.
Yeah, and so actually that's a great point. I didn't even check this tab with the relative value and projected value. I mean, we're close at 100%, so I think that lines up with kind of my gut and what the research is showing, that it's, you know, it is valued fairly, not too high, not too low, but okay.
Thank you.
Thank you. No, if there are no other questions or comments, then I will hand it off to Jay.
Okay, thank
Jay,
you.
would you like me to give you the screen, or would you like me to continue the presentation?
I will take the screen.
Okay.
Myself a
I have a
presenter.
question.
Okay, thank you.
Mina,
Okay.
Mina, I
Yes,
have a
Ray.
question.
Yes, sir.
I didn't catch all the numbers, but there are good number of cloud-based companies, security companies now. I do not know how QLYS compares with them, but your assumption of high PE ratio of 60 is even above what the SSG is showing for last 5 years.
Right.
What is the reason for higher than last 5 years high PE ratio?
Well, I think that the reason is I eliminated some of the earlier years where their growth was a lot more drastic. I didn't think it reflected the current state of the company. So I picked the last 5 years as an approximate window, and then I saw that it was relatively consistent, and that I didn't see any sort of research to indicate it would change dramatically from how they are performing, and they have been relatively consistent. So I thought it was maybe a reasonable assumption to think that they would continue on that trend. If you think that should change, we can definitely. I have the live SSG. We can definitely play around with it.
Yeah, there are some excellent companies in security, cloud-based security, but okay.
Definitely.
Okay.
Every time I found research, QLYS is always noted as one of the industry leaders. There's a handful of companies. You're definitely right that it's a pretty competitive industry. But there's always maybe a handful of companies that are listed, and I consistently see QLYS in that list of leaders in it. So I'm hoping they continue to take advantage of that position.
Yeah, they especially leader in one area. Now I can't remember what. Something about management. Chris, do you remember? They are leader in one particular area.
I think Mina mentioned it.
Oh.
Sorry, Chris, I can't hear you very well.
Oh, I said vulnerability management.
Right.
There you go. Yeah.
Yeah, the vulnerability management. So it's a lot of the cloud based, and I'm with the industry growing so much. Yes, it is competitive, but there's going to also be a larger pie. So hopefully that makes up for some of the increased competition.
Right. Also, this company just launched 2 new products almost it's going to be a year. So in their guidance, they excluded these two products. So that 10% guidance was based on, to my understanding, it was based on the products that they have been on the
Yes.
market, except that two new products. So if potentially if the sales doing well, the projection can be, the growth can be a bit higher than 10%.
Definitely. I think I picked more of a more conservative model. Just you're right in terms of I didn't find enough information to make any assumptions about the new products in terms of their performance, but it definitely could increase.
Right. Chris, do you have any other comments since you follow this company? Chris, you're muted.
Yeah, I'm just thinking, is it really justified to, I guess, like, so I personally, I think that it's a little bit aggressive in terms of like the SSG, because when I do my SSG, I usually also block out the 71% or the 71 PE of the 2017.
Right.
Oh, the high PE.
Yeah,
Yeah.
and I did block that out in the initial. So sorry, you're right. It's not blocked out here, but in the initial recommendation, I did take those out.
Yeah, so that's the reason why I thought that if like you don't block it out and then you still only get like 10%, I don't think it's worth a buy. But that's just my opinion.
The return ratio now, if we eliminate those, is appreciation. Yeah, it's total returns 11%.
So one more time, I think you said, what was the PEG ratio?
The PEG ratio is 6, so here he is. You can see it there on the screen. Oh no, pardon me, Jay has the screen. The PEG ratio is 6.
Uh-oh.
6. Okay, thank you. Pretty high.
Something going on. Okay. All right. So then I'm going to join. Okay, I'm going to present.
Oh.
There's a background noise. Okay. All right. I'm going to talk about First American Financial. So this is a insurance company. They are mainly in two areas: title insurance and specialty insurance. So I'm going to follow Mina's pattern. I'm going to come back to my highlights. I'm going to also show you my SSG first. So this is a small, medium-sized company, and they, as I mentioned, they have mainly the business is insurance in two areas, and I highlight here they have a title segment about 92%, specialty insurance is 8% out of their revenue. This is their breakdown. U.S. title, agency, commercial mortgage, international, and they also doing data analytics. For specialty, they have home warranty and a property and a casualty. So this is their business. And I cannot find. I'm going to mute Joanne for a second. I cannot find this. This company doesn't have any guidance. And oh, Joanne, can you mute yourself, please? I'm going to mute her. Sorry. So this company is a medium-sized company. Historically, the sales is only show here is a 5.7%. Last 5 years also is under 6%. And the earning per share last 10 years is about 21%. You will ask, why do I give only 4.8? First, let me go back to the sales revenue. As I said, I cannot find companies' guidance, and I research other analysts' estimates. I don't find any. The only analyst I could find was Yahoo, but Yahoo actually gave a negative 3%. So then I decided, okay, let me use value line projection and to calculate the sales growth rate. it ends up as only like a below 1%. So I decided to give her 5%. That I assume that this company, the next 5 years, will continue can sustain the 5% growth rate, as because the last 5 years is at the 5.6, last 10 years 5.7. I just assume this will be the next 5 years growth rate, 5%. And for the earnings, what I did was I decided to use Value Line's projection. I modified a few things for their earnings. I checked they are. I'm using Silent. I don't know if anybody had the chance to look at the Silent presentation back in, I believe was May 2020, spring or May. I don't remember. There was a presentation about Silent, which was teach you how to use the Value Line numbers to, don't look the Value Line left hand side. There's a little table. Use the Value Line projection to calculate, to validate your projections if you don't find companies guidance. So I was using their income tax rate 21%. I was able to calculate projected diluted share, so very close to, so pretty close to what Morningstar is showing here. And I calculated the pre-tax profit margin, which is 12%. So I'm using 12%. Using that gives, wait, that gives 1.8. That's weird. It was showing, today gives 1.8. It was 4.8. I'm wondering if it was because sorry, let me change something. Oh, yeah, that probably why. So when I use this company, I actually used the projection starting point as at an annual. And we can talk about this. As you can see, if you use a quarter, it's only give you, if I change those numbers, preferred procedure growth calculations, I only give you 2% about, right? So when I'm doing this study, I actually using the annual. I'm looking at this was, I don't have any specific reason why. I don't know. For some reason, I was projecting annually. I was using annual, but that was just my study. I decided to use 5%. Historically, it's about 21. 5%, I will say, consider still pretty low, right? This is their pre-tax profit, return equity, and debt ratio. So the debt to capital, I did not research why those is high. Maybe Ayla can help me with those four. I did not look in those. And for their PE, I chose 11%. The only reason is, let me take a look at my notes. Do I have my notes? Say, why do I choose 11%? I choose 11% because I basically, oh, that's interesting. Actually, initially what I did was I decided to, oh, things has changed. Because I used the annual and valuation, initially I decided to use 13 as they are in my notes. I'm using 13 as they are high PE, okay? And for the low PE, is I decided to use, they are 20% of a current price, and it comes with a hold very close to buy. It really depends on, for this company, we have not made money yet because we just bought a couple months ago, but this company pays dividends. With that low projection, medium-sized company, 5% projected sales and about earnings, that give you average annual return between 9% and 13%. So my summary is this. So this is a medium-sized company, and we hope that the medium-sized company, I was aiming that the sales can be in double digits, but the reality is, historically, the sales growth rate is only like single digit, about 6%. So even with forecasted sales based on the historical sales and what I just show you, the still can give us about 9 to 12% with annual projection starting point, can give us, if I using quarter, actually can give us 14 to 17 annual return. This company pays dividends One thing that I do like this company is that 6 years in a row they have been voted as as a Fortune 100 best companies to work for. To me, that is a good thing. I also looked at the growth of this company. You know, what's their strategy to drive their sales, drive their growth? They do acquisition. They also paying dividends, and they return excess capital to shareholders through dividends and share repurchases. They also, right now, what they are doing is they are streamlining the title and closing process by converting certain manual process into automation. So that's what they are working on to improve their productivity. So my final recommendation for this company is looking at last Friday, the stock's price actually is a hold. A few days ago when I was doing this company was in a buy, I have been asking myself, okay, what's my final recommendation? Should I say buy, even short buy? I recommend to hold only because a couple reasons. One is that the slowing down the housing market, because it's an insurance company, the title insurance company, you know, they do depend on the housing market, right? Also, the risk of a rising interest rate could affect the, new purchase new homes and refinance. So that was why main reasons that I recommend hold. Questions?
I have one.
Yes,
So,
Megumi, I like your question. Go
so
ahead.
you listed repurchasing of shares as a growth strategy. Is that so they can raise money to
Yes.
invest? Is that what it is? Okay.
Right.
Doesn't that also like sort of artificially raise stock prices as well when shares are repurchased?
Raise a stock price. I'm not sure if
Share
that's true.
price.
For us, as better investing community, the stock price was followed by earnings, right? We don't look the stock price, we look their sales and earnings.
Yeah, I just thought it was a way of manipulating the financials, but
Oh, for the company?
yeah, but that's okay.
I'm not sure. Anyone has the answer for
I
that
think
question?
Megumi was thinking
Yes,
about raising the PE by decreasing the shares, right? Are you
Yeah,
thinking of that?
I think so. Some sort of manipulation that companies can do to make their numbers look good or better.
it's very simple. If they buy back shares, that lowers the PE because there's not so
Yeah,
many shares and it's still the same amount of earnings.
yeah,
So it makes
increasing
the
the PE.
stock more
Yeah,
valuable.
yes.
Okay, let me quickly take a look at
The PEG ratio.
oh, so you're talking about inside trading, Megumi?
Yeah.
Yeah. They purchased 320,000. They have not sold any. So, Bernard, is that a good thing or bad thing?
Fine, that's a good thing.
Okay. Thank you. Major holders.
But I think the corporate repurchasing, stock repurchasing shouldn't be in the insider, right? Transaction. These are the shareholders who, I mean, if the company buy its own share, shouldn't be in the insider transaction.
Ah, right, repurchasing. They will list it in their 10Q and 10K.
Exactly.
Yeah.
And then we can double check since you're on that. Can you check the PEG ratio?
Yes. You know, personally, I don't look the PEG ratio, Jane. Maybe you can help me to chime in here.
No, it's just because Bernard had a good presentation, and since we are looking at today, we might as well look at.
Yeah, it's less than 2.
Yeah.
It's sort of the threshold.
Okay. Hey, Isla, do you have any comments on this company since you presented initially?
Hi, everybody. What I would suggest, can you hear me?
Yes.
Yes.
Okay. The only thing I would caution about is that they are increasing their presence in property and property and casualty is having a moment right now with the fires and the building collapsing in Florida and so forth. So property and casualty companies are having a bit of an issue also because they also, their debt may be associated with their purchase of reinsurance, which is supposed to back up for the most part their property and casualty. So that may be some reason for their increased debt.
Mm.
And they are pretty much spread among the areas, and their PNC is spread out among the areas that are the highest risk on the East Coast with rising waters and so forth, and in the West with the fires.
Mm. Okay.
So they're not, they're not a fast grower. They're never going to, I don't think they're ever going to be a fast grower. They will be a steady grower. They will definitely grow steadily, but I don't see that they'll be growing very fast. I don't think we'll ever have to worry about them being the 15% gainer. But then we would have to rely on other stocks in the portfolio to kind of make up for that.
Mm. This company considered as a financial services company.
Yes, because it's insurance. Yeah.
Mm.
And also they don't, the other thing is they don't pay out a lot of money since title is a very large part of their insurance. They don't pay out a lot of money for their title. I mean, title insurance is not, it's not like property and casualty where you have to pay out a bunch of money for it. It's not something you pay out a tremendous amount of money for. And so they're between their investments and so forth and their premiums, they get to keep a lot of what they bring in.
Mm. Okay. Thank you. Any other questions or comments?
Oh, Jay,
Yes.
Yes.
I
Piero.
wonder if I could make a comment. This
Go
is
ahead.
kind of a general interest comment.
Mm-hmm.
Can you go back to the evaluations page on, yeah. You see over here, oh no, at the top chart.
Mm-hmm.
Yeah, you see over here, it says average, on the left side, it says average. And
Mm-hmm.
average is 36.6.
Mm-hmm.
Okay. Now I'm looking at it, I'm thinking, okay, what are they talking about? Are they talking about the average PE? Well, it says here the current price earnings ratio, the average is, oh, you have something there covering it. I can't, oh, it's 8.1. So it can't be the average PE. So when they say average 36.6, what are you talking about? Is it the average price?
No, I think it's, I think it's average of these price
Of the
adding.
price,
Yes.
yeah, that
Yeah.
36.8, the average price, yeah, the
See,
average
if I
low
cross
price.
this, it changes number.
Yeah. So I guess what is that kind of a measure of the beta, the amount of variation in the price?
That's
Is
the
that
question.
why they put it there? Is like
No.
that why?
That's the question. I don't know.
Because what we don't use that. Like I mean, 36.8 or 36.6. So what? no
Right.
interest to us.
Yeah.
I
We
just
have a, yeah.
Right.
it's
Go ahead.
always been there, but I just never bothered to question it.
Yeah. I'm
Well,
going
it's
to ask.
also listed, if
Yeah.
we look, it's listed in section 4B as the average low price of the last 5 years.
Okay.
One of
There
one
you
of the
go.
choices for low
Oh.
price, one of the choices for low price. So that's why it's there. It's not, it has nothing to do with the PEs or anything like that. I think it's
Yeah.
just one of those choices of low price.
Oh, okay.
Oh,
So I guess
there you
they
go. Right
calculate.
here.
Yeah.
Yeah.
So they calculate it for that reason.
Mm.
Yeah, it's interesting.
Mm-hmm.
Okay.
Thank you, Ella. That's, yeah. I never looked this number before, the price.
Yeah,
Yeah.
neither did I.
That
Yeah,
makes
most
sense.
of us over.
Yeah.
Overlook it.
I have a question for you guys. Do you guys use projection starting point using quarter or use annual?
Well, it's supposed to be quarter.
Okay.
Sometimes we have to use annual.
Yeah.
In extreme circumstances, we have to use the trend line.
Yeah, I
Yeah.
think there was a lot of annual use as a result of 2020. So
That's what I heard.
Yeah.
So for me, I use the annual because I was thinking, okay, I'm projecting the next 5 years, next year, I want to looking at annual. That's just me.
Yeah.
And I noticed it could change the earnings, depends on what I select here.
Yeah.
I
So,
think if the current quarter has a dramatic breakthrough, then we may use quarter. Otherwise, I will use annual. Yeah.
Right. Yeah.
Yeah.
I mean,
Some
our estimates are all clearly for 5 years, so changing it
Mm.
every quarter really doesn't make a lot of sense.
for some fast-growing companies,
Yeah.
we may have to use quarterly.
Mm,
mm.
the
So
newer
yeah,
ones, the smaller ones, yeah.
I agree with Isla. This is one thing. I feel like this company is not like some technology company can make this will be a superstar in your portfolio. I think this company may do as well as we projected.
Yeah. Be one of the just as you expected it people.
Yeah, just as you expected.
Mhm.
Yeah. Okay. All right. So next, if you don't have any further questions, I'm going to Narendra is going to present Comcast.
Hello, everyone. I'm taking a further look at Comcast, owned by the club, and which was recently recommended as a sell. However, with the gradual reopening of the theme parks and the film entertainment business after COVID-19, the NBCU division of Comcast is well poised to increase revenues in the summer. The new streamer Peacock landed on Amazon Fire TV in June of this year, and customers will be able to stream the Tokyo Olympics this summer on Apple devices, Google platforms, Android devices, and Microsoft's Xbox One family of devices. On July 8th, Japan issued a COVID-19 related state of emergency, and fans have been banned from attending the Olympics in person. It seems obvious, therefore, that fans will turn to streaming, thus significantly increasing Comcast's customer base. Peacock Premium is available for a mere $4.99 a month or ad-free for $9.99 a month. Comcast has also secured a contract extension with the NFL starting from the 2023 season. The new deal keeps the NFL Sunday night games on Comcast NBC network, as well as 3 Super Bowl games for 2025, 2029, and 2033. The Sunday night games will also be simulcast on Comcast streaming platform Peacock. In other positive takeaways, as of April 2021, Comcast reached its first quarterly break-even milestone since its launch of Peacock, with about 42 million signups within 10 months of its debut. And Sky, which it acquired in 2018, added 221,000 customers in Q1, making it its best first quarter in 6 years. Of note is Comcast's recommitment to capital return strategy after dividend hike and planned resumption of share buybacks. Comcast has consistently paid dividends since 2017. Although in the buy range, the club already owns 28.8% in the communication services sector and overall 49% in the large and mega companies. As a final recommendation, based on the potential for increased revenue in the near future, we continue to hold Comcast in the club's portfolio. It is a mega company with a with a compound annual return of 8.5% using the forecast average high PE and 12.7% using the forecast high PE. I'll just share the SSG with you. As I worked with Joanne and Jay, we have a forecast. We have a forecast 7% for the projected growth rate, and which is in line with analyst projections. And for the earnings per share of 15.54%. And oh gosh, earnings per share. Jay, I may need you to help me out here. I'm trying to figure out the 15.4%.
Sorry, I muted. Yes, we used. Can you uncross out 2017 for a minute? Can you uncheck 2017? So, if oops, yeah, I hit F5. We, if I remember correctly, we used value line projection to calculate, to modify the preferred procedure, default preferred procedure.
Yes.
You can just do the, okay, yeah, go ahead.
I'm trying to hit the F5, but it's not.
Yeah, what you can do is just to not do F5. Did you see on your browser, there's a, you can do hit the refresh?
Yes.
Yeah.
Okay.
Okay. If you don't cross out 2015, the growth rate is about 15%, historical growth rate. The reason why we did the 2015 was because of tax reason. We just want to see what happened, why there's a spike. So if you double click 15.4, that green box, you will see that we made changes on the preferred procedure. So we used, we kept the tax rate as 23.9. We calculated a pre-tax profit margin. We also calculated a share outstanding to 4192. These numbers are using value line projection, and we want to override the defaults. That's why it gave us 15.4.
Okay, thank you.
Mm-hmm.
And then in terms of our valuation and return, we used a high PE of 19%, which is the average of the last 5 years. So we came up with a forecasted high price of $98.40. And we chose 80% of the current price as our forecasted low price. Which then put the company in the buy range with the 3.5 to 1 upside downside ratio. And the compounded the compound annual return of 12.7% using the forecast high PE and 8.5 using the average PE. Any questions for me?
So what's your final recommendation?
So we're not knocking.
My final recommendation was that that based on the potential for increased revenue, that we continue to hold the company, to hold Comcast in the club's portfolio.
Mm-hmm. Because also in this sector, we have a very large.
Yes, the 28.8% in the communications services sector, and overall 49% of large or mega companies. And from what I've been learning from BetterInvesting, the ratio should be 25, 50, 25, I think. So 25 large, 50 medium, and 25 small. Am I correct?
Yeah.
Any further questions for me?
Bernard, you have comment or question?
Or comment?
Bernard used to follow this company. Maybe Bernard's
I
not
think.
there. Oh, hi, Bernard.
I am here.
Okay.
And I talked to Roy Chastain about it one time, and he told me, well, maybe you could just knock out the 2020 because as a bad year, and the company was probably going to come back, and I think it will. I think it's a hold myself. That's what I think, but it's a big company. It's a hard one. There's 4 big companies. You got Comcast, you got NBC, you got Sky, and you got this the streaming too. It's a very big company.
I have a question. Hello?
Go
Yes.
ahead, Ready.
Yes. Ready?
Yeah. This is a large company, and we are assuming EPS growth rate of 15.4%. Is that a reasonable?
That's Bioline projected. Okay. Norinda, what if you change your go to the first tab, analyze growth quality, change that to quarter. Oh, you are in the quarter. Oh, it's in the quarter. So can you go down a little bit to take a look what the concern that Reddy has? So historical is about 15%. He's asking the growth rate is a 15.4 point. If it's that too high, could be. I don't know. The number that reason why we use this is we used Violine's 2024 to 2026, including 2022 to 2024, 2026 projection. So to come out with this 15%. Tom has a recommendation, which actually Joanne's going to talk about it later on this meeting, to take a look the sector, because we have Disney, we have Comcast, we have Facebook, to see if truly this company is a strong hold, or should we sell? So another group will do a second look of this industry or sector, which Joanne will talk about it later
Okay.
at today's meeting.
We actually need to move along because we went over.
Okay.
So now it's time for us to talk about Piero is going to talk about Schwab, selling Schwab. I'm going to talk about the buy prompt from the portfolio management for Algonquin. I still am finding that it's a hold for Algonquin, even though, let's see, this is my, I'll take the screen, hold on, real quick. Okay, this is, I just updated to the price today. Let's see, it's showing in a buy. I mean, everything looks really good from the SSG, but taking a deeper dive into Algonquin, this is just comparing it to the S&P. So for a while it was outperforming S&P in its return. And now it's like for the past, I guess since March or so, the stock has not been doing that well. So I'm not sure. They got hit heavily by the snowstorms or the weather in Texas. So I don't know if they're still recovering from that. Also, I had a concern about they didn't have enough cash reserves for paying their interest. So I'm hesitant about investing more into the company. Yeah, this is the 1 year. This is compared to their total return versus S&P total return. So my recommendation is still a hold. Piero, did you want to talk about Schwab? Should I give you the screen? Piero, are you there?
Yeah. Oh, hold on, Joanne. I thought
Okay.
that since I was recommending a hold,
Okay.
did we talk about it next?
Oh, next week.
Meeting?
Okay. Yeah.
Yeah.
Okay. We can do that. Good, because we're a little running out of time. Mina, are you ready to talk about? Oh, and just a reminder that we have quarterly reports due next month for everybody. Mina, are you ready to talk about the club business?
Yeah, I mean that. Yeah, it's news to me. Some of the items. I think this agenda was updated at the last minute, but
Yeah.
yeah. So I wasn't privy to some of
Okay.
those conversations, but yeah, we can go over the contributions. I think realistically, I think Reddy is the best one to explain the contributions, but we can
Okay.
definitely go over it because I think he had a really good proposal for how it's organized in terms of the calculations
Okay.
as a per member contribution rather than a
Should we
fixed
go
number.
over the amendments to the
Okay,
this,
yeah, let's definitely go
this
over
is
the
what
amendment.
this is what we how does this work?
Right, so I wasn't privy to that. I wasn't part of that. I didn't know you guys had a meeting.
This is our discussion in our executive meeting. Remember when we were changing our updating, we went through the articles of agreement at
Right.
the executive meeting. So this is just it was written, documented. So
Okay, yeah, but I don't think it was circulated, but that's fine. We'll pull it up. Just give me a second.
okay.
Yeah.
So I guess the number one was, okay, so we are proposing changes to our articles of agreement. And first of all, we want to change from the investing of $1,000 each month to each club member will contribute a fixed amount of $100 each month. So we'll have to do motions and vote on each of these. And then the next one was when somebody's terminated, we weren't deducting the amount of money they had contributed and what the valuation was when they left. So we'd like to adjust that in the articles of agreement. Number 3 is the duties of a member, we want to document that they should participate in a minimum of 2 stock studies or education topics a year. So it can be either 2 stock studies or a stock study and an education topic, or 2 education topics. So that's just the quick overview of what we want to change in our articles of agreement, and it has to go up to a vote. So we can either send this out after the meeting and discuss or think about it and then vote next month, or although we should probably vote on number 1 now.
So that I
So
think
that,
number 1 needs to be, yeah, that definitely needs to be decided today.
yeah. Let's see.
Yeah,
What
we need to
else?
talk about number 2. Are we raising money or are we selling? Because we proposed to raise money initially. After talking to Tom Loftus yesterday, probably it's good practice to sell stocks to pay payout.
So instead of raising money, we will sell stock
That's
if
what.
we don't have enough cash in the broker account.
Okay. Yeah, that's something we can think about it. We don't have to vote it today.
Okay.
Yeah, definitely we can send out
Or we can say we may sell stock, or we could say we may raise money for payout or sell stock if we don't have enough cash.
Sure.
Well, I mean, that's not very clear.
How do we raise money other than
Yeah,
selling?
exactly.
Well, we would say everybody has to, and it's virtual money, right? But other clubs do this where you would write a check for whatever. Each member would write a check for $100 to pay out the member. But since we're virtual, it would be just like a virtual contribution.
Right, but how would that balance out in terms of calculating the overall return on the portfolio?
Or taxes too.
Well, we don't address taxes, but
Oh, sorry. Yeah, not the taxes in terms of if we're, for example, if we were to write a check, maybe I'm understanding, but if, let's say in real money,
you'd still have the same number of units.
right, but your contribution amount has increased without additional equity, so that would have to rebalance the returns, right?
So we shouldn't do.
No, I'm just
That's
curious.
confusing to me. So maybe we should
Well,
just
if we raise money and we're adding, let's say when we have to add, let's say $1,000 each. We've added that to contribution without a change in the equity. That would change the overall return on the money invested, right, for each member. So would we have to rebalance the portfolio at the same, like not rebalance portfolio, pardon me, reconsider the
allocation for each member.
Allocation and returns and all that stuff.
Right.
That sounds, well, I guess that's the same thing as if we sold stock, right? We'd have to rebalance the allocation.
Well, a couple of things. Actually, there's comment about we should operate as close as possible to reality, like at the real club.
Exactly.
Or to your real portfolio. Say I want to redo my roof or paint my house. I'm going to sell stock out of my portfolio, but how do I figure out which stocks to sell? So I think it would be beneficial for us to learn how we assess stocks, how we assess our portfolio when we need to take money out.
Joanne?
Yes.
I think there are 3-4 different details for that decision. One is how much we are contributing per month, fixed or variable amounts.
Yeah, that's number one.
Whether it is before the meeting or after the meeting.
Oh, yeah.
Then what cash balance we have. And the third thing is, do we have to pay outgoing member immediately, or we have a month's time? Then the fourth component is, the last component is only when we need additional cash, we need to decide what to sell.
I didn't understand that last part.
In spite of the contribution and cash balance available and delaying the payment, if we still need additional money to pay out, then only we need to consider to sell the stocks we have.
Right.
Okay.
But I think the question is that either do we just consider it a selling or do we raise funds? I think I personally fall on the side that we could probably sell
Okay.
some items,
I-
but I'll leave it up to
I like to propose that the outgoing member payment be paid in a month's time, not the day he's leaving.
Okay. Outgoing member
Payout
is paid out.
at the next meeting or something like that.
And I guess, Reddy, my question would be, is that in conjunction with your thoughts on when we should be adding the cash contribution for the month? Like, so are we adding, I guess my question would be, is that payout going to be inclusive of the $1,000 or whatever the amount is that we add in cash for the following month? Could we just deduct that, or would it happen before the meeting and before cash is deposited?
Okay. That one, I was discussing with Joanne earlier that we should contribute each member a fixed amount, not the total amount for the club.
Yeah, that's not number one. To each member will contribute a fixed amount of $100 each month.
Right.
Then we're going to say the amount will be added at the month before, at the beginning of the month, before the monthly.
And right, and so that would that happen then before any member payout? So would that a member payout include that additional contribution?
Yeah. I think contribution.
No, this is when
monthly.
I understand they're separate points, but I'm just saying how would they work together?
Monthly contribution has to be on the day of the meeting. Everybody brings a check and pays the contribution during the meeting.
Contribution usually
Jay,
is
did
the
you
beginning
remember? I thought we the month. I thought we remember.
We
Yeah.
pay each club. When we did it was at the Real Money Club. I pay probably was the end of each month. Does it matter? It does not matter as long as your money is in your account by the time you have a meeting. So right. Does it matter when you pay the contribution and at the end of a month or beginning of a month? I think we agreed on is to add contribution at the beginning of the month.
Generally on the meeting day.
Well, but it should be
doesn't
made.
Matter. That does not matter, right?
It should be, if it's a meeting day, it should be made before the meeting.
Yeah, before the meeting.
It can be made on the meeting day, but it should be before the meeting. So it should register. It should
what
register.
If we just do the day before the meeting, the Sunday, the contribution goes in as cash, the market's closed. We'll just put it on the Sunday.
I just say anytime at the beginning of the month before the meeting.
Sure.
Because it's just going
before
to
the meeting
cash.
is fine.
It's
yes,
just
before
going
the
to
meeting.
cash. It's not doing anything.
Right.
Right. So I guess the only reason, sorry, I didn't mean to confuse anything, but my question is, if it's just going to cash and we have a member being paid out from a previous meeting, let's say, does that additional cash, could that be used to pay out that meeting to that member, or will it be not considered? Like the timing, is that matter at all for that one?
I think it can be used.
Mina, that's what exactly I did for last month. On the day of the meeting, we do not have enough cash to pay out and buy new stock. So what I did on the day of the meeting, I deposited the money, okay, and then paid out the members, and then and bought the new iRobot stock.
Perfect. Yeah, no, just wanted to make sure, just if we're making these things here. That's all.
I see.
Perfect.
So what
the
department?
monthly contribution has to come first.
Right.
Awesome. Yeah, that's exactly how I wanted to put it. Yeah. The monthly contribution comes first, payout second, and then investment third.
Yeah. Gotcha. The payout will be the following month. For example, John Callison take a year leave this month. We pay him next month. We don't pay him right away. Because a lot of time in reality that the club has make a discussion like, oh, what do we sell? What should we? It takes time. So the person doesn't get it right away.
So maybe we shouldn't say, maybe we should say within 2 months of the meeting.
I
Sure.
think so. Yeah.
2 months
Yes.
will be no too long, but within a month. But his number of shares to be paid out, not the cash. Number of
I know,
shares and
but you
yeah.
need to
We need to
discuss
vote.
yeah, if we sell, we need to discuss what to sell if we don't have enough
Yes.
cash.
Yes. So when member is announcing to withdraw
Uh-huh.
during our monthly meeting, like such as today,
Mm-hmm.
then the treasurer I had to update what is our cash position, which is done. Then if we decide to specially buy any new stock, and we have to consider whether to buy or hold, and if we don't have enough cash, where we have to, during today's meeting, for example, we have to decide what stock to sell to pay out the outgoing member.
Mm-hmm.
So if we
So
have cash, we can pay them out within a month. If we don't have cash, we have to have time for discussion and voting on which stocks to sell, and that would give us 2 months. So I'm
yes,
saying outgoing members are paid out at a maximum of 2 months.
I think 2 months may
Maybe
not
we should
be.
have a minimum amount, whatever's enough to pay out a member. That's our minimum, so that can be just completed at monthly.
Say that again, Magoon.
So how much do we pay out when a member
It's all
leaves?
different.
They get
Depends on
whatever you invested, and then whatever the valuation of your investment. So if
Oh
it's in,
gosh,
yeah. So I
oh,
think,
it varies.
yeah, it could be
It varies.
3,000, yeah, 600, yeah.
Yeah. So Reddy, you do need 2 months. I'll tell you why. For example, right now, you just find out John is withdraw, right? So you don't know how much money you need, because
It's
you need
about
to let the club
$3,000.
know. We need a 700. So, it's not happening on the fly. You need to
Okay,
present
okay,
it to the club next month.
okay, John, G.
Mm-hmm.
Roughly $3,000 for
So
John
I
Patterson.
don't understand.
Roughly
Can you let Reddy,
$3,000 to pay out to John
I don't.
Patterson. We are going
Bernard,
to
can you
raise.
let Reddy finish, please?
Okay. Roughly $3,000 to pay out John Catterson. We have 14 members, $1,400 per $100 each today. So we have to struggle with another 200 we have. So we have to struggle with another 1,400 more. So
Mhm.
if the
Right.
1,400,
So we have to figure out what to sell to
Right.
either
You
what
don't
to
know
sell
cover
at this
today.
point. What I'm telling you is that you don't know how much John you needed for John.
It's about
The members
$3,000.
know, Reddy, you
Okay,
know
well,
as a treasurer,
maybe,
but the club does not know.
all
So what
right.
I'm saying is you need to present to the club, say, hey, John Callison is withdraw and we need this much money. So you don't know at this point. You will know next month. So you need to let the club know.
How about we have the presentation at the next meeting for each member if there's a payout, and we do a vote that evening the same way we do for any buy or sell on the proposal that we approve the payout for this person at this amount, and we vote for
Mina,
it after the meeting. Is that easier?
Mina, iClub member value is displayed clearly. In iClub accounting tab, member value is displayed
Right,
for
but
all the
we're still
members.
talking about
Yeah,
payouts, so we should have a member vote on that, right?
yeah,
Just to
and we
clarify.
don't know. Maybe the officers know, but we don't, as members, know who's leaving. Like I didn't know John was leaving.
Right, like
So
this is
how?
to be ratified and formalized so that we have a good record, that everybody approves of the amount. I don't think it's anything controversial. I don't think it'd be a difficult vote, just something to be probably on the record. And that way, at least we have a structured way. We know if we have the payout ready to go on the next meeting, and it can occur at any point after that before the second meeting. I think that solves the concerns that Jay is raising, that you won't have the calculation today to make that payout. And this way, and also alleviate some of the concerns about having 60-day wait periods. I don't know. Thoughts?
So, I don't understand this. Why are we going from virtual to real and making it so much more complicated?
We're not,
If
Bernard. We're just
it really, it
changing.
looks like,
It's still virtual, but we're assigning dollar amounts per person versus having a lump sum. It's making it easier for the treasurer to
yeah,
track.
but
It's still virtual.
yeah, but if it's, well, okay, why track it at all?
Because
If
we need to
if you
act
just
like
take 1,000,
it's a real portfolio.
It is virtual
it's
operation,
still,
but closer to a real club operating.
Right, exactly.
Okay. So Jay,
Yes.
what
Mhm.
does what do real club investing members usually pay?
I have several years.
Between
We
20,
pay fixed amount of month check each month during the meeting.
Yeah, but what usually what do they
yes.
pay?
Okay, so it depends.
50.
Each club different. So
Okay.
I used to pay minimum if they require. One of the clubs I joined was a minimum of 25.
Okay.
There's percentage. So I did 25. Later I raised to 50. I think there's percentage. So 25 to 50. But
Okay.
you cannot like give 1,000. You cannot do that.
No.
You know. Yeah. There's
Yeah.
some sort of
Yeah.
agreement. Mhm.
Yeah. Kind of a limit, right? I mean,
Right. There's a limit.
who's going to pay $100 every month right now? Nobody's going to do that. $25, sure. $50, maybe.
No, $100 per month.
They don't want to. They don't want you to use club as a like a mutual fund. So that's
Yeah.
why they limit on it.
Yeah. That's what we should do. Just try to mimic the reality.
Right. That's what we're trying to do right now.
Yeah.
Mimic the
50
reality.
bucks. $50.
So then are we going
What's your money? $100 per member is a good round number.
Agreed.
1,400 per month.
Yeah.
I think the other issue is that it would also limit our buying ability, or we'd have to reduce the amount.
Yeah.
We also purchase in $1,000 increments. So if we were,
Yeah, that's the
$25
Meena has a very good point. These days stock prices are very high to buy anything. The $50 is 700 per month is small money. I think raise it to $100 per month per member to be realistic to buy anything nowadays.
Yeah. It would take you 3 months to have enough money to buy anything.
Yeah.
Right.
Yes.
And my point is that in reality, for your own personal portfolio, you're going to put in, you're going to buy more stock. I mean, you're going to put in more money than just, I don't know, $25. You're going to be buying $1,000 worth of shares, or, I mean, so
Yeah. Yeah, you are.
I'd like to mimic not what a club would do as far as contribution, but what a personal account looks like. Because when I did the $25, so with the club, then I thought, oh, I'm contributing a lot by buying $200 worth of stock. Well, you can't make any money with $200 of stock. You need to start making
In the past, we were complaining that we were cash rich, not investing. Right now, next several months,
Yeah, what happened?
People have left and taken all the money with them, and so now we have nothing.
next several months we will be cash poor because that's the way the
And
balance is.
still not investing.
Okay,
We're equity
so
rich.
can we close out this discussion and move on to the next one? So what we'll do is we'll send out this proposed changes to the Articles of Agreement. I can't remember I think the changes in the Articles of Agreement are also reflected in the investment policy statement. So I'll send out a link to the amendments and the links to the Articles of Agreement and investment policy statement.
Okay, Joanne, I have just one more. I have one more
Yes,
question.
go ahead.
How do we
So
have
if
the
I will
discussion
suggest,
about
Joanne,
So ready.
Let Isla speak.
if we decide that we want to sell stock to pay somebody out? How and when do we have that discussion?
Reddy would probably, he'll have to come up with the dollar amount. And the treasurer would tell us what the dollar amount is to pay out, what we have in cash, and what remaining amount needs to be acquired through selling of stock. Then we would have a discussion as a club. Hopefully, we already
Would
have
that be the following meeting after
Yeah.
the announcement
yeah,
is made?
yeah, yeah,
So that would have to be part of the agenda. We would have to have a
Yes.
specific amount of
Yes,
time
we
to
definitely
discuss
have.
all that. Okay.
yeah.
I think we should
All
carve
right.
out, yeah, 10-15 minutes. We can discuss some candidates.
If you look at my first two slides of today's presentation, treasurer's report, that will show clearly our position.
Okay. All right. So really quickly, I'm going to go through, actually, it looks like Tom Loftus, you changed this. I was going to talk about this, the watch list. Tom, are you on?
Yes.
Okay. So this may be something more that, I don't know if you want to talk about it. Jay, myself, and Tom Loftus got together to clean up the watch list. So let's see, is this the watch list? Yeah.
Yes.
So we put together this consolidated all the lists. And so this is a watch list. If once you start looking for a challenge to either an existing stock or doing a stock study, please refer to this watch list and check out the stocks that have already been identified as possible buys. Okay.
Even the 2016 numbers?
Yeah.
You need to double check
we
that. So I want to give you something. The watch list initially was have a many more stocks. We deleted all those large mega companies. We kept
okay.
small and medium. We also briefly just looked at SSG, the graphics, the fundamentals. We kept, I don't think we read all of it, but most of it we looked. If the
Yeah.
graphs looks good, we kept.
We're trying to look for upstream. We're trying to look for really good, A plus, B, better investing stocks. So if you see one that's doesn't meet, immediate criteria, then you'll just go ahead and delete it. But you see, okay, and also a note, this tab, you do not edit this tab. This is where you would add a company to the watch list. So that's another thing, because this is all this is pulled through formulas from Google Finance. So
Oh.
if you add a stock, add it to this edit list. Don't ever touch the do not edit tab.
Yeah, it will automatically populate it.
Yeah,
All the
yeah,
information will display on the do not edit
Yeah.
tab.
yeah.
So just add your last company. What's the ticker, sector, industry, size?
And then
Buy up to if you
also we're asking you to, everybody who adds a stock to the watch list, that you do a quick SSG, a level 1 SSG. And Tom Loftus, are we going to put together a folder for watch list ITKs?
Yep, we can. Yeah,
Okay.
I'll put one up. Yep.
Okay, so it'll be in the same location that the portfolio ITKs are on. So these will be the watch list ITKs.
I think somebody said that word, but I will repeat that word, Joanne. To be honest, these watch lists are compiled for last 4 or 5 years. I think it's we should look at today's some screeners like Better Investment,
Oh yeah,
Fidelity, or any other
that's what.
screeners.
So that's what this says on the agenda here. Challenge the portfolio by sector and comparing the watch list and screening tools. SSG
Yeah.
screening tool, Manifest Investing, Value Line has screening tools. So the watch list is just another tool to use when you're looking for stocks. But we know that we were putting together the watch list, but we weren't doing anything with it. So we want to make sure that the watch list is beneficial.
Yeah, I think, but we should look at the screeners and select
Yes, yeah.
two stocks in
Yeah.
each sector or something.
Yeah, right.
And that's
Okay,
going to,
and then the next point is that Tom Loftus is suggesting that we focus more on our portfolio rather than trying to find new sectors or new stocks. That so that let's see, which one is this? So the stock study committee is formed by the stock followers to assess this. I don't know what that means,
Okay, what
Tom.
that
Did
means,
you
I
write
can
that?
explain. For example,
Okay.
so September, we have a stock study, right, committee. So instead, using this example, Schwab FAF. So we want to look into financial services. Tom Loftus, Piero, and Isla will be the committee because they are the two people follow these two companies. Oh, sorry. I mean, Isla's not presenting FF. The follower, who's FF? Henny? Who is it?
Bernard.
Bernard.
Bernard,
Okay. So
yeah.
Bernard, Piero, and Tom Loftus, three of them is the committee. So they will look at the financial services company to figure out, you know, are there any buy more, sell? What's the final recommendation? So they will do a deep dive. Actually, Joanne recommend not look at the financial services. We should look at the communication because communication is much larger.
Right.
Yeah,
in our
Tom,
portfolio.
what do you think about looking at communication
Yeah, I think
services?
that's what we agreed to. Yeah.
So,
Okay.
so it's
We
not
already talked about FAF this.
Yeah, we
yeah.
did.
Yeah.
And
Yeah.
Schwab, we're going to talk about Schwab next month. So,
Yeah. So okay. So communications because it's so big.
so
Yeah.
what do you, we want to do communications?
Yes.
Yeah. So it's Comcast, Walt Disney, and Facebook. So
Ooh.
So
those.
Facebook is Megumi. Comcast is who's Comcast now?
It's Hanny.
Any okay. And what's another one?
I can't
Oh, Disney. Disney's Matt.
and,
Yeah.
Matt is
and
Disney.
Facebook. What else? Oops.
That's it. I
Do you
think.
remember? Let's see, wait.
Okay.
I can look. I
No,
think
it's Matt. Matt is Disney.
Any. So do we want all those people in the stock study?
no, they
Yeah,
need
and I thought
to
we,
defend themselves.
so are we going to, maybe it makes sense, but I thought we weren't going to try to double up on like you have to do a quarterly report and another
Right.
at the same, on the
No,
same
this is
meeting.
September. September, there aren't any quarterlies.
Oh,
You know what,
gotcha. Okay.
just in case, yes, this is September.
Okay.
Let's just say in August you already find out FB you recommend to sell portion of it. Just to say,
Okay.
yeah, it can be carried. I think.
Yeah.
Okay, so I guess you have to be able to. So, Tom, you're going to have to outline how you
I will.
envision this
I will.
stock study to be. Okay.
Yeah. I'll send out
Okay.
a note. I'll send out
Okay.
the message I sent to you.
Okay. All right. So John's not here. He was going to do a assign stock watchers and peer reviewers. I'm going to do a quick. I think nobody's following iRobot, so let's see. Where is that?
Okay.
Oh, this isn't updated. Okay.
How many stocks do we have now?
15.
16.
Okay.
Wait, did we sell anything last time? Algonquin.
It's 15 or 16.
Oh, so we need somebody to follow FNV or Franco Nevada.
Do we have anybody have Frank Nevada? Oh, well, we have one person. I don't know if that person already left.
That might have been Gabe. Does anybody own Franco Nevada?
Well,
Oh, does anybody own BioMarin? Well, I guess one person. Oh, does anybody own eBay?
We also need to ask a Hanny about that too. Yeah,
We
but
might-
Hanny
we
was
might-
not even there. Yeah.
We might drop eBay. So one of our policies is, and actually maybe that needs to be added to the amendment too, is that we drop stocks that nobody owns.
I thought it's already there.
Well, why is that? No.
Because one of the reasons why we have, I mean, why doesn't anybody own it if it's a good company? Why isn't there confidence in the company if nobody owns it?
Why not the other way? If the club owns, that means the person may consider owning himself.
Wait, say
Club,
that again?
we do the analysis in the club for all good stocks. So once a person hears all the club presentations, club portfolio, then he will go back and try to acquire some of these.
Yeah,
Not the
but
other way.
if nobody's purchased it since it was presented in May,
Yeah, we don't have to, somebody in the club doesn't already have to own the stock for us to present on it. We can present on it and then give time for people to buy it. But if people don't buy it in a, several months.
we
For
made it,
example, do the timeline
I
on
mean,
that though? I mean, like the
No.
example you gave is May. This is the second meeting since that company was purchased. Should we say, if it's 6 months and unknown, then we just delete it? Like, should we have a benchmark to give people an opportunity to investigate it, buy or sell it? And
a couple quarters.
Because we have analyzed in the club like Vertex and iRobot, so I have some few shares of Vertex, and I'm trying to buy iRobot. Okay, so club study is used in the personal portfolio to get them, not the other way around.
yeah, I agree.
Yeah.
Wait. Well, I don't think it should be, if we shouldn't have stocks in our portfolio that nobody has confidence in purchasing themselves.
If they are doing good, the performance is the criteria to keep them.
Yeah, so we just have to give a timeline, like
Give a
say
timeline, yeah.
2
I
quarters.
thought we initially agreed on a quarter. I don't know, a year. We try to do is not wasting our resources. If nobody owns it, why do we waste our time to follow it? That was why.
Yeah.
Yeah, you're right. We can do a timeline, like a 3 quarters, a year.
Oh, I think 2 quarters. I mean,
2
people should
quarters.
yeah.
2 quarters is plenty.
That's 6 months. Yeah, that's 6
Yeah,
months.
That's a long
6
time.
months,
Yeah.
2
And I mean,
quarters.
also, if someone comes to the meeting and we're about to drop one and says, I'm making this purchase next week, or I'm very interested in buying this company, then we can always make an exception and leave that one on if it's
Yeah.
high company. But I think 6 months is plenty of time to make a decision and to put the funds together to jump in if that's what you want to do.
Yeah, it might turn to a sell by then.
Right.
So really quick, who wants to follow Franco Nevada and who wants to follow iRobot? And if nobody volunteers, then Mina will pick the person. Oh, maybe I'll pick the person. I'll pick the person.
All right, fine.
All right, fine, what?
You can pick.
Okay. So any volunteers?
I'll follow iRobot.
Okay. Yay, Isla. Okay.
Thanks, Isla.
Make it simple. Make it simple.
Okay. And then anybody want to be the peer reviewer for iRobot?
I can.
I can do.
Oh yeah, Jane. Okay.
Okay.
Let's see. And how about Franco Nevada? Oh, we need both. Wait.
Yeah.
Oh, and eBay. John's following eBay. Shoot.
Don't everybody jump at once now.
Okay. I'll be assigning.
I say retired people have to double up.
Okay.
So who's
Dig on the
retired in your group? I don't think we have. I mean,
Dig-
Handy's retired.
Dig on the non-workers there. Okay.
Frank Nevada, we should give to Hanny because he understands gold. He understands mining.
Yeah.
Manny just had a little grandson. He's gonna be for a little for the next couple of weeks. So I don't know if he'll be able to
That's
commit.
true. That's
Right.
true.
First grandson too, so it's special.
Yeah, so that's all encompassing there.
Exactly.
Okay. I'll try to keep that in mind when I assign.
Yeah. Yeah. New
Unless anybody
grandparents
wants-
are left out for a little while.
How about you
Good.
randomly pick? Draw a
Anyone-
name or something?
Anybody want to do eBay, which we might not hold for very much longer?
Joanne.
Yes. Hey, you know what, guys? I'm filling in for vice president for John, secretary for Adam. I can't take on more. And then, yeah, I'm not
And
taking
then more,
on
and
more.
then more stocks too. Yeah. Okay.
Okay. Nobody wants to take another stock. Come
Going
on.
once, going twice.
Okay.
I don't
I'm the
have
same.
Frank Nevada. I don't want to follow Frank Nevada. I can
Okay.
trade
I
with
don't,
Isla.
I don't know
Both
anything.
of
I don't know
those
anything
businesses,
about Franklin, Nevada.
yeah.
I'm
Do you want?
no,
Do you want to
nothing
do
about gold.
eBay, Jay?
He's
We're
like,
gonna.
I don't know.
Let's give
What
to
else?
Chris.
Chris, do you want to do eBay or
How
Franco
about if
Nevada?
Chris, you
I
can, we
don't
can
want
co-follow.
to do eBay, but
We can co-follow together. How about that? Just for a quarter or two, and then if nobody have it.
Yeah.
Well, Piero is the peer reviewer. Piero, do you want to do eBay? We can co-follow. Or Chris, I don't know.
Guys, we have to make sure we don't scare away our guests.
Yeah.
Okay.
Oh, you know
Okay.
what? We need to ask Miranda if she wants to join us. Maybe she can.
Okay.
Yeah, we
That's
haven't.
true.
We have some club business we still have to get back to. So I'm sure we can
Okay.
deal with this. We can get, we can
Okay.
get the link.
We'll
Yeah,
table this. We'll get
we'll
back
table
to
this
it.
for now.
Okay.
Okay. Yeah.
Thanks, Mina. Okay. So I'm adjourning the meeting then.
Do we
Okay.
need to speak to Narendra on the meeting, or is that after the meeting? Like, we'll do it after.
We first we asked Narinda if she wants to join.
Right. Is Narendra still on? I think I see her.
Yes, I am.
Yes, there she is.
Narinda, you still want to join?
Yes, I do.
Oh, so I can give
good.
her a stock. Oh,
Yeah.
if,
I will
okay.
recommend give her easy one. Don't give a
Okay.
hard one.
Yeah,
Frank
not
Nevada is.
Franklin.
Yep.
Yeah, tough one.
I think iRobot is easier than Frank Nevada.
No, but there's
Mina,
eBay. eBay is pretty easy.
Oh, eBay is easy. eBay
Yeah.
is easy. We can give her eBay.
Yeah.
Not just for 6 months.
Mina,
Nobody have it. Yeah.
Yeah.
Mina and Joanne, before you hang up, adjourn.
Mhm.
Me as a treasurer is still limbo. How much to add deposit to this month?
Well, I think
Whether
we
it's
should make
1400 or 1400 or 1000.
We're
right. So
going to
before we
vote.
adjourn, we have to do our motion.
Vote.
We have to do any
Yeah,
motions
motion
yet.
that.
So I think we'll do it as part of a vote. If
Yeah.
there's a proposed vote, we'll second it, and then if we can do that one, if we can have that one due within the 24 hours, then ready. Does that give you enough time to add the funds if we do it tomorrow?
Yeah, we proposed last month and delayed the voting today, and that should be the voted.
Okay, in that case, I propose that we adopt the contribution method as outlined earlier. So being each member receives contributes $100 to the group each month, and those funds will be added before the subsequent meeting.
I second it.
Perfect.
Yes, on the day after the meeting, I will add them, right?
Great.
Yeah.
Yeah, as soon as the vote passes, we'll be you'll be empowered to do so.
Yeah, for example, after tonight or tomorrow morning, I add them.
Yes. So I think this one is as soon as we reach a simple majority. So depending whenever the vote closes, as soon as you'll receive the email, then I think anytime after that is whenever is convenient for you.
Okay, $100 per month for active members after the meeting date.
Yes. That's the proposal.
So fixed amount of $100 each month per member for contribution.
Each month.
Let's see.
Understand why we'd want to copy the other clubs. We had it so beautiful and so simple as a
Okay.
virtual club,
The
$1,000 a month,
The
and the
contribution.
bookkeeping was
No,
bookkeeping was easy. Okay,
it was
I just
difficult.
don't understand this.
It
I
was
think we're
difficult,
making
Bernard.
it
This
more
is much. This
Yeah,
is more. This is much easier for the treasurer.
The treasurer had
contri-
trouble. Yeah.
Okay, the contribution. So when do you want the contribution to be made after the made?
The meeting day after the meeting.
Well, I guess the funds will be added prior to the funds for that month will be added prior to that month's meeting, right? So the July meeting, the funds would be deposited anytime before the third Monday of July, right?
Correct.
Got it.
So say that. So can I say the contribution we made prior to?
The meeting.
Yeah, right. And that way it gives us some flexibility on the date.
Okay.
Like, ready if you're unavailable on the first of the month and you do it on the third, then,
Yeah.
perfectly fine, whatever.
So each member will contribute a fixed amount of $100 each month per member. Well, I already said that each month. Okay.
Yeah.
Contribute,
Okay.
yeah.
Each club member will contribute a fixed amount of $100 each. Maybe you said virtual.
Virtual, definitely.
Definitely, yeah.
No, everything is virtual. You don't have to repeat every time.
And you
Somebody,
can take out fixed
Or
amount, right? Because $100 is a fixed amount.
Virtual amount.
$100
Each
each
club
month.
member will contribute a virtual amount of $100 each month. The contribution will be made prior to the monthly meeting. Does that sound good?
Yeah.
Sounds good.
Okay.
Motion made by Mina, seconded by Megumi.
Perfect.
Save and notify members.
Now, do we have any proposals for votes on buying or selling any of the companies we reviewed today?
I think nothing is buy, right? Oh,
Nothing.
well, Comcast is buy. Oh, QLYS too.
Yeah,
QLYS
quality
second
of
quarter
borderline
is
buy.
next, yeah,
That's
QLYS second quarter is next month, and
that's a good.
Comcast is too big. I mean, no, sorry, not Comcast too big. The communication they will review next month.
Well, Comcast sector, we have too much in Comcast sector and too much in the mega and large size companies. So we shouldn't be adding to it.
And what about Schwab? Any thoughts on buying or selling? Any motion?
Schwab
Mina,
is not presented yet. Have to wait till
Schwab's
next
going to be
month.
presented next
Pardon me,
month.
not Schwab.
Yeah.
Pardon me. SAF. Sorry.
Algonquin.
Yes, sir.
Yeah.
hello, Mina.
Yes, sir.
Before you went to the second question too fast. We had to decide. We deposit $1,400 tonight, 14 members, and John Catterson's payment is around 3,000, and we need another $1,400 more. So either we need to raise the cash 1,400 or sell something.
So
Yeah,
what is our
IOU.
current cash situation again?
Huh?
We
current
decided not to discuss today. Are we discussing John Callison's tonight? Or
No,
next
so
month?
no, I don't think we are, but I think Reddy makes a good point in the sense of we will have to make a payout at some point next month. So the
Oh.
contribution is probably we'll have to consider that definitely. But do we have enough in terms of the current cash position plus next month's contribution payout?
Okay. This month 1,400, this month 1,400, next month 1,400, $200 cash, so 3,000. We have to pay about 3,100.
Well, we're back to zero.
Well, then I guess that will definitely inform if we're going to do a buy or a sell today. That's for sure. Any
I
buy?
think we should sell. We should sell. I would like to wait until communications being reviewed. I have a feeling we mean to sell
Okay.
some.
Yep.
To raise money.
Okay. I'm going to adjourn the meeting because we're already over by 17 minutes.
Well, sorry, just joined. I guess so. We'll just clarify. Nobody wants to make a motion to make a purchase or a sell at this point. We'll wait until next month. Or does there anybody have a motion to make, and then we can adjourn as soon as. Just wanted to confirm.
When is John Catterson withdrawing?
Now.
So it'll be effective next month, correct?
Yeah. He just gave his notice now. So yeah.
Okay, if we are not selling anything, next month we need to sell at least a small amount of cash. 1,400 plus 1,400 comes close to paying out, but we need still few dollars short.
Okay. So
Okay.
everybody keep that in mind when you're doing your quarterly reports. If it's a
How much
sell,
time do we have to present the quarterly reports?
well,
Depends
generally,
on what you recommend.
yeah.
If there's a buy or a sell action, we give more time for hold. It's usually maybe just a quick summary to catch people up on where the company is. But if a buy or a sell, we definitely afford more time for that.
And then we have to put in time to discuss what to sell.
Right. So we'll have to include probably a good 15 minutes at the end of next meeting to deal with the payouts and just to make sure that we have it'll be the first time we do it. So I assume we'll need an extra few minutes just to discuss, and then.
And then the portfolio review will come out also, right?
Right.
So that I think Tom will recommend which ones are
And sell.
sell.
Yeah.
Right.
Okay.
Okay, so I think that's it. I think we can adjourn at this point.
Okay, I'm going to stop the recording then.
Great, thank you.